Oh man, I got to say I love our shows, and I love it when the C Money's here. They call him C Money, Corbin Claypool, CT.
What's going on, everybody? Thanks for having me on, Greg.
Absolutely.
Looking forward to getting some good information for the buyers and sellers and all the people circling the tower right now to try to buy that house.
That's what we're doing today, right? We're going to give a professional real estate and mortgage loan market update from two professionals that really care about the public. We like to give these about every 2 to 3 weeks, keep you in tune so your buyers, sellers, investors can make the right choice. And let's go ahead. You start off, Corbin. Give them some good information and rock and roll.
Sounds good. Yeah. So overall, my opinion on rates right now is I think it's a good time to really lock in your rate. The rates actually adjusted. We thought they were going to adjust poorly after things were announced this week, and I'll go over some of those things. But they adjusted actually better, which really surprised me. But I think
interest rates got better.
No, not a lot better. So when we're talking about better, we're talking about very small changes in the basis points. So the clientele doesn't really feel that. But what we're seeing is we're seeing a trend where things are going to go up most likely. So right now we kind of hit a new medium where rates are in the low threes, right? If you're on a conventional loan, and then things are going to go up, and then now things can maybe go into the mid threes and things like that. Not saying that's going to happen right now, but even Barry Habib has projected that could happen in the next couple of months. So just to kind of go over a couple different things. The new administration unveiled his $2 trillion infrastructure proposal. Corporate taxes will likely rise from 21 to 28%. $621 billion is going into transportation, bridges, roads. $400 billion to care for elderly. $300 billion to improving drinking water. $300 billion into building and retrofitting affordable housing. $580 billion in American manufacturing, research and development, and job training efforts. And I could go on and on and on. But the reason I read this stuff is this is the kind of stuff that affects rates, which is really weird because it's not like there's something set in stone where somebody looks at a chart and says, okay, the rates are going to go up. The rates are very much connected and correlated to how the economy is doing. Okay. Because of COVID going away, we're seeing some positive changes that are going to be occurring, and that's going to cause a rise in the rates. So to kind of give everybody an idea of where the rates are at, you're probably in the low threes roughly on your conventional mortgage. You're going to be in the high twos on your VA and FHA mortgage, 2.75. If you have a lower FICO on an FHA, you're probably going to be in the threes maybe. And as far as programs and things of that nature, we are back on track. Things are pretty much back to normal. We have the non-QM programs. I have a non-QM lender right now that's saving a deal for us, and he's doing it. He's really good. I love the guy. He's doing it in 15 days. So clients that need bank statement loans, things of that nature, we can do all that stuff. So overall, it's not. I don't want clients to get scared as far as rates going up, because at the end of the day, it is what it is. The rates are still going to be incredibly low. If they're in the threes, mid threes, high threes, it's still very low. When I got into this industry, things were in the fives and people were happy to get a 5% interest rate.
Okay.
And so, I just think that things are going. One thing I do want to point out is even though the rates are rising, it has not stopped buyer demand at all. The report on Monday, I think it was Monday, came out, and it said that actually there's more buyers trying to buy despite the interest rates going up. And Fresno was just released. This was released yesterday, the day before. #1 housing market in the nation. So people thinking that this market's going to crash, it's just not going to. There's too much demand, and people are moving in from these other areas because we are one of the last affordable places in Fresno or in California. So things are going to most likely continue to rise, and I think that it's really going to shock people. We're kind of in a protected zone because, again, we are the last affordable place or one of the last affordable big cities in California, and people are moving in here. So that's my market update for you.
That is a great market update. You're absolutely right. I did see that come out. The number one, area in the nation for housing. There's many markets though that are selling more than they're listing. So it's a seller's market, but the buyer's market too, because the buyers are getting such a good price, such a good interest rate that they're way ahead. And
Right.
here's the proof: when you have your real estate professional, me, purchasing a home on the coast to take advantage of the price and interest rates today, knowing they're going to go up. If your agent's doing that, you might want to take a serious look at this. It's time. You got lenders and agents across the board buying properties, move up investments or whatever they're doing, right, Corbin? So you just invested in a home too, so you know that's real.
Yeah, dude. When you're buying a home too, you're not okay. You're not flipping the home. Okay, it's a long-term investment. So let's say things did drop. I bought this house knowing that there's always a risk that it could go down. But it doesn't matter because my interest is literally so low that even if it goes down, the interest rates are going to be higher at the time. And the mortgage on it is going to be the same. And it's the long-term appreciation that I'm looking at. What is this property going to be worth in 20, 30 years? A lot more than it's worth now.
Yeah. Yeah. And let's say the average person lives in a home 6 to 8 years. So let's say it's 7 years before they move out of the area or they move up to a different property, which happens all the time. It's about 6, 7 years nationally. That being said, where's this house going to appreciate? It's not going to go down. If it goes down 2 or 3 or 4 or 5 or 8% in the next 2 or 3 years, that's only going to go right back up. So over in a cycle of 7 or 8 years, you're going to be top again. You're going to be looking at a great price improvement on that property. For instance, you pay $350 now, 7 years when you're ready to sell, that property, even with any correction in the market, will still be worth $450, $500. About every 15 to 18 years, it will double in price. So if you're taking 7, 8 years and you're reselling, it's worth 50% more on a national average over the last 100 years. Really, that's truthful stuff. So that 350 then is another 50% in 7 or 8 years. That's going to put you right around what 175 times 2. So you're right around the 525 mark, right? So you're still way ahead. And not only that, here's another thing that some of the buyers don't think about, and we want them to think this through. Not just, well, I'm going to wait for it to drop. First of all, if it corrects, it's only going to be minimum.
They've been saying that.
The rates are going to go up and shut up.
Yeah, I don't mean to interrupt you, man, but whenever they say that, it just makes me almost irritated because people have been saying it's going to drop for the last 4 years since I've been in this industry.
Right.
It hasn't dropped. People, when I bought my fourplex, my apartment complex 4 years ago, 3 years ago, everybody was saying, you shouldn't do that. It's going to drop. You're going to lose your money. Yada, yada, yada. Hasn't dropped.
Right.
So it drives me crazy when people get stuck on that, man.
Right. So there's the correction there. And they probably are tying it into 2007 to 2012 when there was a foreclosure market. This is not a foreclosure market. This is a solid economy that was put together, and it's still going very strong. So we're looking good on that. If there is any correction, it is not a foreclosure type of market. It's just a correction in price, but there's too much activity for that to really happen at this point as we speak. And that being said, as long as there's this much activity, that's not going to happen. And you would agree, if there is any correction, Corbin, the interest rate's going to go likely up. They can't keep it down to 3% forever. It's not sustainable for a long period of time. So that will get eaten up on any small reduction in price that could happen in the next year or something like that. So it is time to buy now, is what I'm saying. That's the absolute truth. I just closed the deal with you, so that is actual truth. I know that. So do you. No, it's a great opportunity right now. That's for sure. Well, give me one more good positive piece of information. What do we have?
Yeah, man. I mean, just overall, I think rates are still fantastic. The rates are all-time lows still.
What do the buyers need for a credit score right now? What are we looking at for a minimum credit score?
600. You can go lower than 600. We usually help the client do credit repair if it's below 600.
If we can get 620, 640, we're looking real good, right?
Absolutely. Yeah, no, everything's pretty back to normal. And when COVID hit, those 620, 640s, I mean, most of the lenders around us, they stopped doing them. We were still doing them, but there was only like 2 lenders that were doing them, and the turn times were horrible. I mean, you would go in an escrow, and it would take 75 days to close, and it would just be an absolute struggle. That is gone. Every lender is pretty much adjusted back down to doing the 600, 620, 640 FICOs, which in turn, now we have the normal turn time. So you can close a 620, 640 FICO in 30 days. It's not like things are going over. So
that's incredible. That is great. And the banks are still lending money. Everything's still loosened up, ready to lend, right?
Oh yeah, UWM, our biggest partner. They've released probably 75%, maybe even more of their COVID guidelines.
Wow.
Yeah, so all the COVID guidelines and overlays that they've had, they've been slowly getting rid of them. And yeah, it's been real positive. We've been seeing positive changes overall. People are still refinancing, not to the extent and the refinance boom that we had at the end of last year, which I'm kind of happy about. But yeah, man, it's a great market still.
That's what I like to say. That me and you, we have the home and the loan. The home and the loan. That has a nice ring to it. Okay, I'm going to read my report. Now I got to put on my super darks so I can actually read.
There you go.
All right. So I'm going to go back. Now this is for February. We gave a report on this already. This is a little bit more updated. Okay, I'm going to go down the line and make it easy for the public. For sale in 2020 in February of 2021, we had 799 rounded up to 800 for homes for sale on the market. New listings, we had 927, and we sold 706. So we got 927 new listings, 800 of those sold in the same 30 days, and 706 sold. So we're at overage a little over 100. And we 917. Listen to this. Now 927 homes were new listings for the month of February, and 917 went into escrow. So basically, it's 917 to 927. Almost 100% of them that are getting listed are going into escrow, right? And that's in a 30-day period. If you take a 45 or 60-day period, we're selling more than it's hitting the market. So the market's actually staying the same, or less listings are available. So it's a strong market. I don't see it changing much. That's the good news. Take advantage, buyers, of those interest rates today. Sellers, take advantage and get those homes listed, because it's not going to last forever. Okay, months of inventory. We have 1.1 months of inventory, meaning if Fresno County and the area didn't list another property in 1.1 month, or about 31 days, we would be out of homes for sale. That is a seller's market, and buyers are taking advantage because of the interest rates. So it's a great market for both sides of this. Absorption rate is about 90%, 88.4, meaning if we list 100 homes, 88.4 are getting sold immediately. Okay.
Wow.
Average active price. Okay. Here's a key. Listen to this, public. This is important. An active actual price of all the homes, ranches, land, etc. I'm putting everything in the loop here. Average price is $531,000 on the MLS system. That's the active average price on the market. But the active sold price is much different. $373,000. That's up, not down. $373,000 is your active sold. That means a lot of them are bigger homes selling for over 500, but the average sold is 373,000. Your medium home price right now is 350. Here's the kicker. In December of 2020, the medium home price in Fresno County was 356,000. It is now 350,000. It's a $6,000 difference, or about 0.8%, little less than 1% total in price. That hasn't quite started a trend yet, so we're watching those numbers carefully. Square footage price is up though, from $192 a square foot in December and January to $200 a square foot. So the price per foot has went up. The median home prices went down, probably because of the bigger or more than average size homes. The average days on the market is 27 days on the market. That's super fast, super aggressive. The average home price is selling for more than 100% of asking. So you make an offer at or above asking, get with your professional. We know how to negotiate those opportunities, get with the lender, tie in a great offer. A medium home price, again, 350,000, and the medium sold price. Now I gave you the average sold price in the last 30 days. The medium home price average is 341. So your average price sold is 341,000. It's a great market. The other thing, the other thing that I want to let you know is, and Corbin's already said it. This is the gospel. The rates are outstandingly low. The prices fluctuating are still balanced and stabilized right now. The actual price per square foot, in summary, has went up $8 a square foot. The average median price is down to 350, about 0.8%. That's since December, so that's a 90-day period. However, the price per square foot is up, and the overall prices on the homes is up. Right. So when you look at that, it's a very um, stabilized, healthy market right now. Great for the buyers and the sellers. It's rare that we get a seller and buyer both winning, right? And I know that our professionalism is speaking through because you purchased a nice home recently, and I purchased one. So when your professionals are doing that, buyers, it's time to get off the fence. I want the buyers to think about one more thing here in this cast. Corbin, if they wait a year to buy, and
Right.
it goes up and it continues to go up or stay stabilized, the rates go up, they're going to lose. If they wait to buy, they're going to throw, let's say, take an average rent, $1,500 a month, which would be considered cheap, right?
Right.
Let's say it's 1,700 a month. Let's get real. 1,700 a month times 12 months. So we're looking at what, $18,000, about $20,000 a year in rent. You're going to put $20,000 in rent a year at about 1,700 a month. You're going to throw away to a landlord. You're going to give it to that landlord because you didn't want to buy and you're hoping something disastrous happen, which isn't going to happen. That being said, you're going to lose $20,000 that you could put equity into your own home and have the benefits of your own home and start seeing that appreciation quickly. And not to forget a huge tax benefits that tenants and renters aren't thinking about.
Right.
It, they win. Waiting is not an option. You're only making your landlord rich. Let's get off the fence. Let's get you into a home, get a place to call your home, the freedom that you deserve, the tax benefits that you deserve, the interest rates that you deserve, and make a place your own. Quit
And
making.
I want to point something out too, and I'm not sure if it has a direct correlation. I know COVID devastated the economy in a lot of different ways in certain sectors and all that. And
Really?
I feel like if I'm not saying a correction is not going to happen, I'm not saying anything of that nature. I'm saying right now there's such high demand and so low inventory that it's just not going to happen right now. However, don't you think if it was going to collapse and it was going to happen, that it would have happened during COVID? I mean, really, everything kept going up during COVID, right?
Yep.
But
Yep.
I mean, obviously, it stopped people from listing and things of that nature. But what I'm saying is, we went all through that whole 2020 with, the inventory getting smaller and smaller and all that kind of stuff, which of course affects the value because there's not as many homes to buy. But I just feel personally, and this is probably maybe not even correct, but I just feel like it would have taken a big hit during that time when things got a little scary for people.
Yeah. Yeah. I agree with that. Like I'm tracking the numbers bi-weekly. The medium average home price for Fresno County is down $6,000. That's verified fact. But the price per square foot is up. Some of the bigger sales and some of the smaller homes are selling. So when you have like 1,400 square foot homes, more entry level selling a lot, which is what's happening right now, those price per square foot are going up, and that's skewing the numbers. But the average price is down 6,000 in 90 days. That's only about, in 90 days, that's less than 1% in 90 days. So that's nothing. And here's what I've noticed in the last 60 days. It dropped over from January to December. That's when it dropped to 6,000. It's stabilized in the last 60 days. So it's not really moving one way or the other. It's just there. It's just stable. So I think right now they're looking at potentially rates going up over the year slightly, which could happen. Right. Prices being very stable, like you said, and a lot of that depends on things we don't know yet, as far as the economy, the administration, and what they plan on doing. You read a lot of that information, so I think to play it safe, lock and load your interest rates as soon as you can. Be careful with the volatility, right?
Absolutely. Yep.
Well, I think that was a great report. We hope everybody got something. Every 2 weeks on Thursday at 11:30, me and Corbin from Nexa Mortgage. And Corbin, give them your information. Maybe your website and your phone number in case they want to call you for a loan.
Yep, it's 559-313-5819. And then you can also send your inquiry or questions to the Claypool Group at nexamortgage.com.
All right, you guys have my information ticking across the bottom. Anybody, any agents, brokers, or teams looking at EXP, gregwright.com, or call text 559-260-1777. Here also for sellers, buyers, and investors. We love to help them all. We're well versed in real estate. We work with honesty and integrity, and we hope that we can help you, the public. All right, Corbin, we'll talk. All right, bye.